Okay. Perfect. So, hello everybody. I'm going to be kicking off in just 60 seconds with the presentation. How we're going to be running this session, for those who've connected early, is giving you a bit of an overview of some of the different tax considerations that you must have with a potential move with taxation coming up to the tax season, both as self-employed and if you are employed. Then what we will do is open up for any questions anybody might have. We can see if we can answer on this call. If it ends up being too complex where we need to have a more personalized advice, we can also schedule sessions afterwards beyond that. Now, in 30 seconds, we're going to launch and kick off. And the presentation will be in English, while if there are any questions which come in Spanish, I'm very happy to respond to any questions in Espanol, however anyone would like. Okay. So, hi, I'm Louis. I'm one of the founders of Entre, Trámites, an accounting and legal firm covering everything boring in Spain. Now, what are we going to be talking about today? We're going to be talking about taxes and everything you need to be dealing with in the upcoming tax return season, which is about to kick off at the beginning of April. During this consultation, during this presentation, you're going to have different questions which might come up, different ideas. Now, within this, my idea is I'm going to run through the initial part of the webinar and then open up for questions at the end. If you have anything which you think is highly relevant on that, do not worry about writing in the comments feed any questions. So I've got that everyone can send messages and type in. So let's kick off. Let's start off with the concept of tax residency. Okay, one of the most important concepts of tax residency is often where you are living in that given calendar year. So in Spain, they define the tax year as the same as the calendar year, i.e. January 1st to December 31st. And tax residency is something which can be defined retrospectively, not necessarily in advance. What does that mean? If you move to Spain in 2024, if you move in the second half of the year, you will not be considered, in most cases, tax resident in Spain because another country has a larger claim to your tax residency. For instance, if you were in Germany from January to July, and then July 15th, you made a move to Spain, you would be considered German tax resident for that full year. What does that mean? That means that in Spain, you would pay a tax of 19 to 24% on Spanish salary. Now, if you were in Germany, which is within the EU, you would be paying, if you were German tax resident, you would pay 19% withholding tax. If you were, let's say, living in the US outside of the EU, you would have paid a 24% withholding tax in Spain on that Spanish salary. The same rule applies for Spanish rental income, while Spanish dividends, capital gains, and bank interest is 19% in all of these cases. Now, one mistake that people have is they say, oh, I've paid that in Spain, I don't need to do anything with that. In most countries, you actually have to declare that Spanish income in that other country. So in the case of Germany, you would have to declare the money you made in Spain in your German tax return. However, you would get a credit for the taxes that you already paid in Spain. So this is one very important thing if you've been a recent mover to Spain, to be aware that you likely, if you moved in the second half of the year last year, you likely have a tax obligation to file in your other country of residence. Now let's say that this is not your situation, but instead you actually moved in the first half of the year last year, or you were living in Spain all of last year. How does this work? In this case, income tax in Spain is a variable rate of tax. And it's a tax on your global income. So even if you'd earned money in, let's say you'd gone and worked for a 2-month project out in Germany, if you'd worked in any of these other, let's say you had gone to work self-employed in the US, these earnings would be taxable. Now, they would give you a credit for any taxes paid in the other country, but this income you should declare in your Spanish tax return. Now, there is a small exemption to this, which is very important to be aware of, called Exemption 7P. And this is a particular issue if anybody who's watching at the moment, say is a consultant who might be posted overseas to other countries by their employer. If you've been posted overseas and you have had earnings limited to 60,000 euros overseas during that year, those earnings, it's possible to have no income tax paid in Spain on those. So let's say you went and worked for a month on a placement in the UK and you made 5,000 euros. That 5,000 euro payment, if that was for employment, under exemption 7P, you would not need to declare that in Spain. Why is that useful? Because, for instance, in the UK, those earnings would pay 0% income tax because you have a tax-free allowance of 12,500. So this can be very useful if with your employer you have postings overseas. Exemption 7P. Now, that's the only core exception on that. On the other side, if you have rental income, let's say you've got a rental property in France, that income must be declared in Spain. You will get a tax credit for the taxes paid in France, and in most countries under double tax treaties, there will be a tax credit on the withholding tax charged in the other country. What happens if that withholding tax is higher than the Spanish tax that you're meant to pay? You end up paying nothing. If it's lower, then you will pay the difference. Finally, on dividends, capital gains, and bank interest, Spain charges 19 to 23% on the first 200,000 euros, 27% between 200k to 300k, and 30% from 300,000 euros upwards. Now, there's a deductibility for any withholding tax which has been applied already in the other countries. Now, what happens if you didn't live 183 days in Spain, but you didn't live anywhere else for 183 days? Under this situation, depending on double tax treaties, depending on your nationality, your family ties and everything else, you could be deemed to be Spanish tax resident. Critically, it is impossible to have no tax residency. This is one of the biggest errors which occurs when people think they can be digital nomads or anything else, and they think, oh, well, I was traveling all the world, I wasn't anywhere more than 30 days. By default, your tax residency usually would revert to your previous tax residency unless you've managed to establish another tax residency. So if any of you listening in have been nomadic, haven't necessarily registered, or didn't file for the previous few years, thought that you were not resident, actually under OECD tax rules, you will be tax resident somewhere. It is not possible to have no tax residency. There is one final exception, which is under Beckham's law. There is a special form of tax regime which would apply in these cases, but I will get onto that later. Generally, how do taxes work? If you're an employee, you will pay Social Security as an employer and employee. The employer rate is 32% on roughly the first 57,000 euros. The employee rate is about 6.5%. Now, essentially, it doesn't matter which side of the tax happens. If the tax is on the employer, it reduces how much they're willing to pay you. And that's one of the reasons why employment salaries are lower in Spain compared to certain jurisdictions for the same role, because the employer Social Security is so high. On the other hand, there's an income tax which is progressive. Now, this goes from the first 7,500, you basically pay nothing, to gradually increasing from about 19% up to around 47, 48%. Now, within Barcelona and Catalonia, we're looking more like 20.5%. But despite what everybody talks about the variation between Barcelona versus Madrid, income tax does not vary much. On the other hand, you've got Social Security, self-employed, progressive income tax, VAT, quarterly taxes, annual taxes. What on earth does this mean? In Spain, actually, the self-employed pay a lower rate of Social Security than the employed in most cases, as long as you are self-employed earning more than 15,000 euros. Where do people think that they are paying more? Lots of people who are self-employed for the first time think they are paying more because they are only thinking of the 6.5% employee Social Security and are ignoring the 32% employer Social Security. In Spain, Social Security is regressive. What does that mean? If you make a low income, let's say you make 15,000 euros, you will need to pay 3,600 euros in Social Security, approximately a year. Whereas if you make 150,000, you pay 7,300 euros. So your income has doubled, but your Social Security has barely moved. Sorry, your income has gone up by tenfold, but your Social Security has only doubled. So the effective tax rate is 5 times higher on the low earner. The progressive income tax follows a very similar schedule to on the employment basis. Interestingly, when you combine the income tax, which is progressive, and the social security system, you almost perfectly end up paying 1 in 3 euros for the first 55,000 euros, and then pay 47% plus. Then there are taxes such as VAT, where you basically charge VAT if you have consumers buying your product within Spain or internationally if it's a live product. And I'll get onto a couple of the nuances of VAT later. If you are serving business-to-business clients, let's say you're doing contracting or consulting for, let's say, a US tech firm, Singapore-based entity, or an EU entity outside of Spain with a VAT number, you do not need to charge VAT to that client. Basically, business-to-business services exports are exempt. Finally, if you have a limited company, taxation is very similar. The only difference is on top of the income tax, which you're dealing with an income tax withholding, which you need to do for any salary that you pay to any employees or yourself, there is also a corporate income tax, which is charged on the profit of the company. Now, one big error which occurs when people make comparisons between limited companies and autonomous on this is people think, hey, I pay self-employed tax at X, at 33%. I'm going to suddenly pay corporate income tax of only 23%. What a great saving. What people forget is that when you pay the corporate income tax, that doesn't mean you have access to that cash. That only means the company then has access to that cash to reinvest or use it. Actually, for you to then receive that cash, you then need to pay a dividend, and that dividend will face 19 to 23% taxation on the first 200K. So actually, the effective rate of tax on corporate profits end up being the corporate income tax rate, corporation tax, plus the personal dividend base de ahorros. In terms of income tax, when do you need to file? So in general, people file individually rather than joint. If the income of your spouse or partner is less than 7,000 euros, it is a better idea to file individually rather than jointly. If their income is lower than 7,000, it can make sense to make a joint filing. Unlike other countries, the individual and joint filing system is not always advantageous to file jointly. So usually it's only if you have low or no earnings with your partner that it makes sense. What you need to be able to prepare these sort of returns are details of your income, details of any expenses which you might be looking to deduct, and if you are doing a wealth tax return, potential information on assets. In general, download any details and investment accounts that you have overseas and supply all of this information to your accountant, or if you're doing it yourselves, make sure you download these full reports. Why is this important on the asset and earning reports? Let's say you've got an investment account and a brokerage account in the US with $100,000 of assets. Well, those dividends might very well have withholding tax in the US. If you don't download the investment report, you might report your earnings, but fail to claim the double tax relief on those dividends and interest. And this is one common error which occurs where, let's say, you receive dividends worth 100 euros gross, but you paid a 15% withholding tax in the US. That 15% withholding tax is deductible from the tax you're meant to pay in Spain. So let's say you were meant to pay 21% in Spain, you would only pay the 6% difference. But if you fail to submit that, when your tax accountant is filing, you will pay 21% taxation rather than 6%. So it's super important to make sure you get any details on withholding tax to make sure that there are not errors and you don't overpay taxes in Spain. Submission can be done online or in person. In general, online is highly recommended. Submitting in the office with the Agencia Tributaria does not protect you from any investigation or anything else. There is very little advantage to that nowadays. Now, just to give you a rough idea of what we do on this, we divide income into two different plans, basically, for our accounting service. One is a basic income. This is basically if your income is only earned within Spain. You have investment assets in Spain, you have no overseas assets where you need to declare. On the other hand, you've got international income. The basic income is a flat fee, which is 61 euros plus VAT, roughly 74, 75 euros to do your tax return, reviewing whatever complexity you have within Spain. The international income is if you have overseas assets where we need to claim double tax relief and everything else. And in that case, it is a variable calculator, which we will share. When can you file? Online, you can file from April 2nd to June 30th, 2025. If you want to do it by telephone, I highly do not recommend this. you can file between May 6th to June 30th. If you want to do it in person, June 2nd to June 30th. In general, online filing is the best way of doing it, and I highly recommend everybody gets a digital certificate which can be installed on their computer. Why? That means you can review any notifications which come from the government on that regard. So, getting on to deductions. In Spain, in general, deductions are not that large. The big things which are relevant, if you've made donations to any organizations within Catalonia which have any links to languages, but additionally, any donations to any charities in Spain, these are really worth noting down because Spain gives a very nice deductibility for the first 150 euros that you donate a year. So if you made any small donations, and for donations larger than that, they do have tax relief, which gradually goes down, but at 40%, 30%, 20% of what you donated or gifted. So really good to dig out any donation receipts or any donations you made. If your income is lower than 25k or so and you are below 30 years old, it's worth looking at the rental discount which you can get to do with your primary residence rental. And beyond that, if you've recently had a child, there's a useful discount for the birth or adoption of a child. Now, the payment of loan interest for master's and doctoral studies, this is an additional tax break, but it's not that common. This is only if you had loan interest for master's and doctoral studies in a Catalan institution and everything else. So there's some restrictions around this. Where are the areas where tax breaks in general beyond this can be useful? Basically, if you've invested in any startups or you bought an electric car in the last year, that can be useful. If you've had withholding tax in other countries, that is seriously useful. Beyond that, the other tax discounts are not that large. Now, quickly moving on to the wealth tax for non-residents and residents. If you are living in Catalonia and you have more than 500,000 euros of assets, excluding 300,000 euros on your main home, you will need to pay the wealth tax, okay? So if you are resident in Catalonia, above 500 euros. Now, let's say you have 700,000 euros of assets outside of a home worth 200,000. 700,000 euros of assets will only leave 200,000 taxable. It will not be that higher tax. For the first few 100,000, it's more of an irritation rather than a significant tax. But if your assets go above 1 million, you really start having a more significant tax in relation to the wealth tax. Important on this, if you own any private assets which are not traded, let's say you've got the shareholding in a small private business, the business is valued at 5 times the average of the last 3 years' profits or the balance sheet, whichever is higher. Now, if this business is your direct entity, and let's say it was a startup where you've got a stake in terms of tech, and you let's say they raised a large investment raise, it's possible that startup's worth very little, according to the Spanish government. Why? Its profit is incredibly low. It's probably loss-making because most companies which are raising an investment round do not have profitability because that's why they're raising investment. On top of that, their balance sheet usually is quite weak. So if somebody's raised 2 million of investment, let's say at a 20 million valuation, the business will actually only be valued by the Spanish authorities as of the 2 million of capital which has been raised, not the 20 million valuation of that business. So for early stage businesses and stakes in early stage businesses, the Spanish government tends to value them at a very low rate. So wealth tax doesn't tend to be that punitive on entrepreneurs or if you've got any equity positions in early stage businesses. But if you've got stakes in more traditional businesses, anything overseas, this can be significant. Now, these are the tax rates which we're looking at. And as I was mentioning, if you're dealing with basically 700,000 plus, you're looking at just above 350 euros of taxes. Whereas if you have, let's say, 1.2 million of assets, you're dealing with just over 2,600 euros in taxation. Now, in terms of other relevant taxes, we've got inheritance tax and gift tax, which is el impuesto de sucesiones and donaciones. This is very important. This varies by autonomous community, and Catalonia does have it in place. If you receive a gift or inheritance, it is taxable in Spain, if you are tax resident in Spain. That gift and how it's given can vary the tax rate that applies. If you receive a gift for your primary residence and purchasing of, let's say, 50,000 euros, there's a 95% deduction where only 5% of that is taxable. If you receive a gift and you do it in front of a notary, The tax from family members and from close family members, the tax is limited to 7 to 11%. However, if it's gifted outside of a notary, the tax can go up to 32% plus multipliers. So it's very important how you register any of these gifts or transactions if you are going to receive anything. Now, this is not reported in the income tax return. This should be reported between 30 to 60 days of the moment of the gift or inheritance at the moment of any of these things receiving. So if any of you are in the position of having received a large gift or inheritance or anything else, it is very important. You will need to report this in Spain. If you have paid taxes in another country, these taxes are often deductible from this. VAT, we'll dive into that a little bit later, but this is a tax levied on any sales of goods or services in Spain. And the other thing is, if you're looking at purchasing a property, there's a really important part, which is the property transfer tax and stamp duty. In Spain and in Catalonia, if you buy a property, the default tax on the purchase of a property is about 10%. On top of that, you have 1 to 2% in notarial and land registry fees. So as a piece of advice on this one, with the property transfer tax, stamp duty, this is quite a high transaction, and this actually leads to the Spanish property market moving very slowly. To give you an idea, in the US, properties are bought and sold every 3 years, whereas in Spain, properties are bought and sold every 60 years. That means that there is not really the concept of the property ladder, because this transaction tax kills transactions. People are more likely to receive a property from inheritance than they are to buy their own property. Now, Modelo 720. Modelo 720 is an informative filing which you must make if you own assets more than 50,000 euros overseas. This filing is meant to be filed in the next 5 days. Now, if you have not filed this yet and everything else, it might be worth waiting and only filing this in the following year. Why? The Spanish government is not that picky on if you file this 1 year late if you've never filed it before. They infrequently will check on it immediately if this is if last year was your first tax resident year. And it's better to file correctly than do it in a rush and make an error. We are now very close to the deadline for the Modelo 720. As such, I would consider whether it is worth filing this year. You should definitely file the income tax and wealth tax return, but if you've never filed 720 before, you have more than 50,000 euros of assets, you can consider whether you will rather file it next year, even though you were meant to file this by March 31st this year. Basically, the obligation comes if you have more than 50,000 euros of assets overseas in bank accounts, more than 50,000 in investment accounts, or you own more than 50,000 euros of property. Interestingly, let's say you own a property of 60,000 euros between two of you, i.e. 30,000 euros each. Even though your stake is less than 30,000 for property, if the total value of the property is more than 50,000 at the cost of acquisition, or cost of acquisition plus improvements, you need to declare that asset. Now, in terms of filings, if you are self-employed or have a limited company, you need to file VAT and income tax quarterly. This is in April, July, October, and January. Okay. Now, on the VAT filing, if all your clients are overseas and they're all business-to-business clients, you will not need to pay any VAT whatsoever. You will actually only have VAT reclaims. So let's say you bought a laptop for 1,210 euros. 210 euros of that is VAT, and you can reclaim the VAT from the Spanish government. Be aware the Spanish government is a little slow at paying back the VAT. Now, if you're self-employed or you're a limited company, basically you'll need to file quarterly the Modelo 130 for income tax, which is a 20% prepayment of the income tax you owe on income. That is not the total that you pay. At the end of the year, you will then pay depending on your income level. You'll need to pay VAT if you have any sales in Spain or any sales to consumers. If you only have business-to-business clients outside, you will just reclaim VAT. On the other hand, you've got quarterly taxes, which are a filing where there's income tax, VAT, income tax withholdings. So let's say you paid the notary or you paid any other freelancers, you're actually obliged to withhold a bit of the payment to that supplier and pay their income tax on their behalf. So if you hire, let's say, a Spanish autónomo, they will charge you VAT of 21%, and they will ask you to withhold 15% of their bill to pay income tax on their behalf. So if you have employees, autonomous contractors, or anything else, you will need to have also pay income tax on behalf of some of your suppliers. This is a particularly slightly weirder one. Finally, there's an annual income tax return, the Declaración de la Renta, April to June, the annual VAT summary filed in January, February, and the annual informative returns. This is to do with if you've got significant counterparties, if you've rented any property, and a couple of other more nuanced situations. I won't dive into that now because we're trying to cover a broad brush thing and then get onto your questions very soon. In terms of tax brackets, this is what I was saying, that across Spain, you basically deal with 19 to 47% taxation. The first 7.5K, you get a tax credit, which basically wipes out the income tax on this. What's the important concept to be aware of when we're talking about income tax brackets? Income tax brackets are not cliff edges. When you go up from 12,450 to 12,451, your income tax doesn't jump on all your income from 19% to 24%. It's only on the additional income you pay that higher tax rate. So every euro is worth making more money. Now, I'm going to touch briefly on the sense of the VAT returns very quickly, just to explain a very simple concept, which I always use with the yoga class. So if you sell within Spain and you've got Spanish consumers, normal services, let's say you're doing yoga teaching to a class in Eixample and you've the studio class, you are meant to charge 21% VAT to that client. Let's say that instead of yoga teaching, you've got a cafe. On that case, you charge 10% reduced rate. And on the side, you're working as an artist. Any of the artworks you create charges a lower 10% rate of VAT. Instead, you set up a little corner shop selling newspapers. Those newspapers have a reduced rate of 4%, super reduced VAT. The particularly interesting one for many people is if you are engaged in education or healthcare or public transport, there is an exemption for VAT on those services. What does exemption mean? Exemption means you do not charge VAT, but also you cannot reclaim VAT. So in the case of the laptop you bought, you could never reclaim that 210 euros of VAT. Now, what happens in this case of exports? So if you, let's say, are a yoga teacher and you create video guides and everything else for a US business for their yoga, let's say their yoga online courses, that is considered a B2B consulting service. As such, it is 0% rated. You do not need to charge any VAT to your US client, no worries. Let's say instead you do a live class of yoga from your living room onto with a client, and the client is in the UK. Now that client is a retail client. So from a Spanish perspective, they think you're in the 1960s or 1970s. So in order for that class to be happening, it couldn't be online. That person, it was as if that person got on a plane and came and did that yoga class with you. On that case, the VAT which is charged is as if that person was a consumer in Spain and has to pay the 21% VAT. Alternative situation, you record a video and you send it, you send they download a guide. That's the same as if the person bought a DVD in their country. So if that person was in the UK, they would need to pay 20% UK VAT on that. You would need to be registered for VAT and sell it in that form. If you are selling that service, but in Spain, there'll be 0% VAT because it's the exportation of a downloaded, recorded service. So it's viewed as if it was delivered and supplied outside of country. So if it is a live class to a consumer, it is always considered as if it was in Spain. If it's recorded, it's as if it's an export, taxed in the country of destination. If it's business to business, it's an export, and it's usually not taxed under VAT if the business is outside of Spain. Now, we've just got a couple of slides left, and then I'm going to open up to all the questions you may have. Basically, for limited companies, it's very similar to the self-employed. What is the only big difference? If you have a limited company, there's a corporate tax filing deadline in July, and there is a tax deadline for annual accounts where you need to get your annual accounts filed by June. Your annual accounts is the report to the mercantile registry. Technically, you're meant to have them signed off in March, but in practice, there is no actual enforced requirement there. Now, finally, if you are self-employed or a limited company, what deductibles are available? Materials or merchandise, utility bills, potentially rent. However, depending on your rental contract, this could be challenged by the Spanish authorities. On top of that, in general, internet is not deductible. Why? Because it does not vary by how much use you have. Any form of clear business expenses associated with your activity are deductible, and any form of marketing expense or anything else for the operation of your business are deductible. Now, I'd like to open for questions and go everything. There was just one part which I did not touch on, which I want to just touch on very briefly before I open fully to questions, which is what happens if I've got Beckham's Law? If you've got Beckham's Law, you will pay 24% income tax on all your global employment income, self-employment income, or any form of economic activity which is not considered passive. Passive income is completely untaxed in Spain. Wealth tax does not apply on your overseas assets. So if you have dividends, interest, capital gains from overseas, they are not taxed. Critical part of understanding. There are special regimes in the US under LLCs, under S-Corps. There are special regimes such as the Sociedad Anónima Cooperativa in Peru, or special freelance regimes in Georgia and others, where you have limited company special tax treatment, where the limited company is taxed as a person and it's viewed as 2% taxation or something like this. In these cases, it has to pay a corporation tax in the other country and then be emitted as a dividend in order for it to be exempt from Spanish taxation. If it is self-employment earnings in that other jurisdiction, it will be taxed under Beckham's Law and you will need to pay 24% tax on it. Okay, this is particularly important because for many people who think they have Beckham's Law and then they set up an LLC and they don't need to pay any of the tax on that income. That is incorrect if you are in that situation. Now, please fire away on your questions writing. I don't know if anybody can actually speak. I've just realized it. I don't know if people can put on their microphone. Could I just ask, can anybody try if they can switch on their microphone and just say hello?
Hello. Yeah, it works.
Perfect, Neil. Thank you very much. Please, questions, anything. Throw me your most complex or simplest question you want to address. Or hand up if anybody would like to kick off with it. Nina, thank you.
Okay. What if you own property and are earning rent on the property? How does that play into the tax declaration?
Is the property in Spain or outside?
In Spain.
In Spain. Is it long-term rental or short-term rental?
It's long-term rental.
Okay, so if it's 12 months or longer rental, in Spain, by default, property rental income has a 50% tax discount. So property rental income falls under what we call the base general. That's the progressive scale up to 47, 48%. However, under a special tax break, there is a 50% discount for long-term rental. So let's say you had 10,000 euros of income from your property, only 5,000 euros would be taxed at a 48% rate. So it's the equivalent of a max top rate of 24, 25%. And if your income is lower, let's say around 30,000, that tax rate would be more like 33% divided by 2, more like 16.5, 17%. Now, beyond that, there's a possibility if you have limited your rent increases, if you have cut rent or made recent reforms or anything else, that there might be a deduction additionally possibly available where not just 50% is untaxed, but it could increase to 70% or 90% being untaxed. However, these are under pretty specific criteria. If you've just been renting it out like normal, increasing rent by inflation or something similar, you will almost certainly be paying on 50% of that income the tax. Now, if anybody else is in a similar situation, but they have a property overseas, this gets complicated. We know the 70 and 90% deductions are not available. However, the 50% discount is unclear. Why? Previously, the discount, which used to be 60%, applied to all property overseas, all property domestically, if it was long-term rented. However, that tax break was unclear in how how effectively the tax would work on in the case of overseas properties since the reform was placed. We've actually directly asked the tax authorities this 3 times and got 2 different answers. So we've had them say that international properties will not have access to the 50% tax break and that they will have access. Based on the fact we've got inconsistent responses from the tax authorities at the moment, and the Agencia Tributaria hasn't done any form of clarification, for overseas properties, we are waiting till basically May, June to know what the exact situation is, because with an inconsistent response from the Agencia Tributaria, we can't tell you with confidence it's one or the other, because they don't even appear to know. But this should soon be resolved with the tax returns opening very soon, if you are in the position of having an overseas property. If it's short-term rented, there is no tax break. It does not apply. Please, other questions? What else would you like to know?
Hello?
Hello.
Yeah, I just have a quick question. So, like you said, short term, long term. So, long term is everything over 12 months, but you also have from 1 month to 12 months, which is like midterm. No, you have. I thought short term is like not tourists, like renting out to tourists, but you also have the option to rent out from 1 month to 12 months. Is that also considered that you don't have any 50% cut? Or?
So the tax break does not apply if a property is rented out for less than 12 months. And this is one of the critical parts of the reform, actually. So lots of people who've been switching on to 11.5 months because they are unconstrained on Barcelona rental restrictions are sacrificing their access to this tax break. Now, below 1 month, there's licensing restrictions. So in many parts of Spain and in Barcelona, you do need a license to basically make a filing. The basic. So basically, yeah, if it's a midterm contract, you're not going to get the tax break. If it's short term, you don't get the tax break. It's only if it's 12 months or longer do you get the tax break. And if it's 12 months or longer, the rent restrictions do exist.
Okay, thanks.
Yeah. Pleasure. Algunos preguntas en español si piensan que la parte inglés está difícil. If there are any questions in Spanish, feel free within that. If you don't want to ask necessarily, you can also write it in. We've just posted a link if anybody needs help on doing the income tax return filing. That's our link where we can help you with filing. Just be aware on one thing that. Question.
I have one more. So
please,
you mentioned the Modelo, I think it was 720, no?
Yep.
But there's also the 721. I think it's for crypto trading. Exactly. Does it behave like similar to 720 that if you say you're not sure yet, you do it maybe 1 year later, or is it quite similar? Or is it a completely different topic?
It's very similar to the 720.
Okay.
And they've got a similar level on previously the 720 had really high fines for failure to file and even worse ones for making small errors, which was utterly stupid. But the excessive fines were ruled no longer necessary. So your regular fines, which this is why I'm saying if you're thinking you're going to rush to get it in on this deadline, don't rush and file it next year, because making a small error, you'll end up creating more problem for you than it's worth, basically. Here's a QR code if anybody wants to use, by the way. Just realizing. Please. Any other questions? Neil, who tested his microphone, have you got any questions? Anything you'd like to address?
Nothing from my end. It was extremely helpful, but yeah, no further questions. Thank you.
Oh, thank you very much. Anyone else? Yana, David, Xavi, Tatia, Eva. Anything complex, feel free. And if you don't feel comfortable asking it here, we've posted links where you can book in for a consultation and everything else. So these are available as well. If there's self-employment questions, please feel free to fire away. If we don't get anything more in a couple of minutes, I'll launch a couple of last points of things which I might think might be of interest. But I'd rather, if there's anything at the top of your minds at the moment.
Yeah, hi, this is Charlie. I have a question. Sorry for my voice because I have a cold, so I hope you can understand. I have an account with, let's say, imagine you have an account with Trade Republic, okay, in Germany. Okay, it doesn't have an IBAN. It's let's say the account number is in Germany. So I guess the limit you mentioned of 50,000 of 50K is applying. So what about imagine you have like 40,000 in Trade Republic or similar, and you have then in excess of 10,000 in cryptos. So does it, let's say, add both, or is separate up to 50,000?
Okay, so Trade Republic, is it invested in equities, bonds, funds, and things like that?
It's just a deposit, it gives, a bit more of, that deposit in Spain. Yeah. But basically it's a German account.
And it doesn't have an IBAN on it?
No, correct, yes.
So therefore it's treated, it'll be a fund, it'll be a type of, because it's not got an IBAN, it's therefore going to be treated as a money market fund or something similar, the deposit. As a money market fund, it's treated the same as an investment asset, which would be similar to crypto and should be added up to that. So if combined between the two, you bridge over that, then yes, I would say that you would need to file.
Okay, then both separately, 720 and 721?
72021 doesn't, just to confirm, it doesn't have even a German IBAN.
No. It's again, one is just the bank account, okay? Yeah. And the other one is cryptos. It can be in a wallet or
But the bank account, if it doesn't have an IBAN, even a German IBAN, then it won't be a. Then what it would be is a money market fund or something similar. Because all bank account deposits, even like large term deposit accounts, are treated, should always have an IBAN and account number. But if they are a money market fund, they don't have an IBAN. So therefore, in a money market fund, therefore falls under investment. Yes, in theory, you should be filing both the 720 and the 721.
Okay, understood. Thank you.
Yeah. Good question. It's a bit, some of this stuff is a bit weird. Any last question? If not, I'll give a couple of last tidbits of things which I think might be relevant.
Luis, yeah, sorry, just I have another one because I just make a simulation, as I change jobs. It seems, I don't know why, the second part of the year, the new job made a retention, okay, smaller than they should. So it means that I need to pay now, at least based on the simulation I did. Yeah. I need to pay quite a large amount. So is it only possible, I think, to break it, let's say the payment in two, right? That's the maximum that it's allowed. 60 and 40%, I believe.
Yes. If you, before the 40% second payment, have an issue getting the money together for the second payment, what you can do is then notify them to basically contact and request and say, look, can I get a payment plan? Now, I'm also going to give you a bit of a warning on this one. I sincerely recommend, particularly if you've got the case, if you've got cash at hand, which is liquid in a money market fund or anything else, which you can liquidate to pay it, I would advise making the payment. Why? Spain, if you fail to make the second payment because there's something which goes wrong with making the charge and the draw just goes wrong, Spain will instantly start charging you interest accumulated on the whole period retrospectively, plus will make a charge of a small fine for failure to pay. And the Spanish authorities give no leeway. So as soon as there's been a failure to pay, instantly that triggers the requirement for fines. It's not like in other jurisdictions where they give you like a 5-day notice period warning because of a payment intent or something like that. As such, I tend to advise people when they can avoid doing the 2 payment schedules, please do. If you can't, of course, make it as it is. But yes, the issue you also highlighted of under withholding is unfortunately very common from employers, because they don't register your previous job when they register you on your new one. And yeah, so
Understood.
yeah,
Okay, thank you.
that's a pain point. If anybody watching, apologies for the disheveled look. I got the date of my webinar wrong when I was planning on this, and so failed to shave and get cleaned up. But I hope the information was useful. As a last quick concept, and if anybody has a last question, feel free to touch in. I'm going to just present one concept for you, which is economic substance. So one thing, if any of you guys are entrepreneurs or have your own small entities or tech entities at the moment, one of the things which often comes up is, hey, I can save money by setting up an entity in Dubai and paying corporation tax there, and then only invoicing across what I need as self-employed here. This stuff is completely against tax law. One of the most fundamental concepts in international transfer pricing and taxes is economic substance. What this means is where you and your computer are is where your business is. Where you work physically is where your business is, where your factory is. And according to Spanish tax law, and also in many other jurisdictions, your factory is where the corporate profit, income tax, and everything must be attributed. So if you invoice across to an entity in another country 100K and only invoice across 30K to yourself in Spain as an autonomo, that other 70K Spain can claim as taxable at any point in the future. If you do not have employees or anything else in that other jurisdiction, you cannot just set up a company to offshore profits. This is something which commonly people do, thinking that there's no issue with it. They get a tax advisor who says that, hey, Dubai or I don't know, the Seychelles have no issue with this. They say it's all legitimate, or I've got an offshore company in Panama which says that I pay 0%. If you've got an offshore company, you are also defining, even in that country, that you have no substance and therefore no profit can accumulate there. So if any of you do get presented with those opportunities, these fantastic, fascinating zero tax or anything else, please run for the hills. It is not viable. It is not possible. This is why the tech firms have to hire so many staff in Ireland in order to assign their profits there. You do need to have economic substance, employment, and everything else. So if any of you are consultants or contractors and have heard of these sorts of squeezes, please watch out. And remember, in Spain, tax advisors are pretty much not liable for anything. So you can get some really dodgy advice from some really aggressive advisors, and you are the one who will suffer. If you want any consistent help, we're here and happy to help. Again, Entre Trámites, we're here not just for tax, we're here for accounting, we're here for legal, we're here for pretty much everything you don't want to deal with, and if you don't want to pay a premium just for being a foreigner in Spain. If there are no other questions, I don't want to drag on, and thank you very much for your time. I'll wait 10 seconds. Any last question? Speak now or forever hold your peace. There are a comment link in the side. Thank you very much for listening, and apologies if any bits were a bit too boring or dry. Tax is hard to excite people. Guys, have an utterly fantastic day, and pleasure meeting you all. Okay, bye. Oh, David. Last question? No, he was leaving. Okay, have a great day. Bye.
Thank you. Bye-bye.
Thank you very much. Bye-bye.